Okay, so there's something really fascinating happening in the markets right now. Investors are jumping into gold, this ancient safe haven asset, and at the exact same time, they're pouring billions into artificial intelligence, which is the definition of futuristic tech. So, what in the world connects these two completely opposite bets? Let's dig in. So here's the real puzzle. Why are these massive bets on both gold and AI happening at the same time? I mean, it seems like a total contradiction. Gold is your classic shield, right? It's what you buy when you're worried. But AI is about on explosive, high-risk growth. So what's really going on here? We're going to break down the forces driving each of these trades and see what it tells us about the market today.
All right, first up, gold. Its recent price surge has been all over the headlines, but the real story here is way more complex than just a simple fear trade. The old theory about gold was pretty straightforward. You buy it when you're worried the US dollar is going to tank. Simple. But that's just not the full picture anymore. The new reality is that gold has turned into this complex barometer. It's reflecting everything from market mood and geopolitical risk to just pure investment momentum.
So let's break that down. There are really four key things pushing gold right now. First, it's a pure sentiment gauge. Its price is basically whatever people think it's worth. Second, it's just a powerful momentum trade. People are buying it because it's going up. Third, it's being used as a hedge against geopolitical risks that are centered on the US. And finally, it signals the subtle but important shift away from an everything US investment strategy.
Okay, so that last point, that move away from US-centric assets, it brings up a really big question. Does this mean the dollar's dominance is actually at risk?
And the short answer? Well, not really. Look, despite all the noise you might be hearing, the actual data tells a completely different story. This quote here puts it bluntly. When it comes to the global financial system, the US dollar is still, top dog. And yeah, the numbers absolutely back this up. Just look at the survey from the Bank for International Settlements. It shows the dollar is dominant across the board. Foreign transactions, what central banks are holding, global debt, it's the number one currency. So while gold's rally is a big deal, it's not signaling the end of the dollar's reign. Not by a long shot. Now, let's switch gears and talk about the other massive force in the market right now, artificial intelligence. The excitement is absolutely off the charts, but it's also starting to draw a lot of comparisons to the dot-com bubble. So is history just repeating itself, or is there something fundamentally different happening here? There's this fantastic metaphor to describe what's fueling the AI boom. It paints this picture of a system that's just powering itself, which really makes you wonder, where's the external power source coming from? And this gets us to this idea of circular financing. Here's how it works. A tech giant like Microsoft, right? They invest billions in an AI leader like OpenAI. Then OpenAI turns around and uses a huge chunk of that money to buy computing services from, you guessed it, Microsoft. This creates this incredibly tangled web where these companies are all investors, customers, and partners with each other. And that brings us right back to that fundamental question, is this sustainable? It's really important to remember that history doesn't repeat itself exactly. The dot-com bust was a recession in the stock market. I mean, epic declines in tech stocks, but the broader economic recession, it was actually kind of mild. Today, the biggest risk probably isn't a widespread collapse, but something different, extreme market concentration. Okay, I want you to look at this number for a second. 41%. It seems big, right? But what on earth does it actually represent? That's it. Just 10 companies. 10 now make up a staggering 41% of the entire S&P 500 index. This is that concentration risk we were just talking about. The performance of a tiny handful of stocks has this outsized impact on the entire market. And this chart just makes it crystal clear, doesn't it? That one slice represents just 10 companies, while the other represents the remaining 490. It means a big move in one of those top 10 stocks can literally drag the whole market up or down. It's pretty wild. So on one hand, you've got the gold trade, which is all about diversification, maybe stepping away from the US-only mindset. And on the other hand, you've got the AI trade, which is the poster child for concentration. So what does this tension, this push and pull, mean for you as an investor? Well, what we're seeing is a whole new market landscape taking shape. For years, it kind of felt like US stocks were the only game in town, but that's just not true anymore. Things like high-yield bonds are offering real returns again. Alternatives like gold are getting a serious look. And of course, you've got these incredible, though highly concentrated opportunities in AI. All of a sudden, there are just a lot more viable options on the table.
And this is really changing the way people are thinking. If you're a newer investor, you're walking into a world that's just filled with different options right from day one. And if you've been at this for a while, you're finally seeing real proof that, hey, there are other strategies that work beyond just piling into the US equity story.
So here's the bottom line. The market isn't driven by one simple story anymore. It's this incredible tug-of-war between these powerful forces of diversification, which you see in things like gold, and extreme concentration, which is embodied by the AI boom. And navigating what comes next means you have to understand both sides of that rope. And that leaves us with one final big question for you to think about. In this new landscape, with more real choices than we've had in years, what's the right path for you? Are you leaning into the diversification that all these alternatives offer? Or are you betting on the incredible momentum of a few concentrated winners? The answer to that is going to define the next chapter for a lot of investors.